All right, guys. So, uh, the crash I've been warning about, it looks like it's finally starting. I mean, who knows? Obviously, anything can happen with this market, but after, you know, three, two, over 2 months of volatility crush, theta decay, it looks like finally the market is fulfilling that crash that I was calling for in December, which it did start there, but it got choppy and choppy. Um, I have a theory about what that is, and this is like, okay, so there's a lot of people who are perma bullish on this market, as generally you should be. However, if you really want to be advanced with it, you do want to try to time the market. So what happens is the people who are really in the know about the impact that things like rate cuts have on lending and just like the what it does for inflation and how, yes, inflation's up, but lending's down. Therefore, lending going forward, the inflation rate will decrease, and that's just bad for the market because that then prices go lower. They can't sustain their growth. Stocks, the best performing stocks, literally grow based on high profit margins and inflation because they're propped up by inflation. Stock prices are not inflation adjusted, which means that the prices themselves must adjust to inflation. Now, most companies will fail, but the ones that are succeeding will get pumped up by their earnings growth plus inflation. Okay, so anyway, it looks like this is really the leg down, and this one's going to hurt the fucking Bogleheads. Let me just tell you that. So I've noticed that the Boglehead investing strategy has become very popular lately. The Bogle whatever, where it's just like just buy and hold, buy at the regular intervals, and don't worry about what the market's doing. This, that, the other. If it's up, you're buying. If it's down, you're buying. It doesn't matter. Listen, if Boglehead investing becomes widespread, it's going to the market will find a way to put even those people in pain. And some people who think they're Bogleheads, who think they're going to be able to obey that, just watch. If the market crashes as low as I think it could, it's going to shake out some of those so-called Bogle investors. Some of them who think they're going to be buying at the rate, it can take them low enough to where they get scared, and once they start getting scared, even selling for a loss, that's when the bull market will start again. That's how smart these institutions are that manipulate price and all that. They just understand psychology too well. And look, this crash was saved by the rate hikes. Well, this is the end of those rate hikes. This could be the tip of this is the edge of the cliff. All right, and if you just want to know, the COVID crash, we're talking for, let's just round it. It wasn't at 10,000, but we'll round it to 10,000 down to about. Okay, so 9,700 down to about 6,700, we'll say. That is, let me do some quick math for you. Yeah. That is, the COVID crash was about a 33% drop for the NASDAQ. Okay? Imagine losing 33% of your equity from top to bottom. Okay, you think that's bad? Let's go further back. I gotta go on a further time frame. The Great Housing Crisis, from top to bottom, was, we're gonna call that about 2,250 to about 1,000, right? So, let's see how big that drop is. We're gonna go 1,000 divided by 2,250. So yeah, that was over a 50% decline, obviously. So you would lost from top to bottom of the financial crisis, you lost half of your equity. Now let's look at the dot-com bubble burst, top to bottom. Okay, we are talking 4,900 down to 800. Okay. That is over 80% decline. So now I'm not saying it's going to fall that much this time, but I'm saying it has fallen that much in the past. And the dot-com boom, even though the internet was a revolutionary and still is a revolutionary thing that changed the entire world, the stock market rally that speculated the hype of the internet crashed. And even though the internet was massively successful and changed how we live, internet stocks still crashed over 80%. And so just in the same way that AI is going to be revolutionary for the way of life and how we all live, just know it probably won't go that far, but just know it's within the realm of possibility that the NASDAQ crashes 80%. Okay, and so how many people, like, not saying I can't promise it will, this isn't financial advice, I'm just saying be prepared for the unexpected. Okay, you know, and I can't, this isn't bad advice anyway, this is not financial advice, disclaimer, but telling you to be prepared to lose 80% of whatever your value was up here, at least temporarily. Look, I'm just telling you to be cautious. And I'm generally speaking a perma-bull on this market. But even I see the writing on the wall. And guess what? Guess what happened during the COVID crash? Guess what happened to interest rates? They were going lower. Now, obviously, it was triggered by COVID, but still, interesting timing, right? Guess when interest rates were also going down? During the Great Financial Crisis. Guess when interest rates were also going down? During the dot-com crash. Do you see a pattern there? I hope so. Anyway, what that shows, though, is that the biggest crashes occur during rate cuts. And we have a 33% crash, a 50+% crash, and an 80+% crash. Okay? So, and obviously that's just 3 crashes, so you might want to go back further and get more, but the mean, if you take, let's just get the mean. So it was about a 33 plus about a 54 plus about an 83, divide it by 3. The mean of those 3 crashes is still over 50%. So it is definitely within the realm of possibility that this thing loses 50% of its value, meaning that you are going, that if it does, it goes back to its lows from the 2022 crash. Near them, at least. Maybe somewhere below this low. Not financial advice. I can't promise it will, but I'm saying be prepared. What are you going to do if it does? Now, if it does go that low, that would probably be a great place to really start buying heavily, even take out loans at low interest rates, right? Once the interest rates bottom out, great to take a fucking, I don't know, some sort of collateralized loan against whatever your assets are if you have that kind of capital, or if you don't, just try to take out some kind of loan and start buying the NASDAQ up with it, right? But this is the turning point where the interest rate cuts are, and remember, this also was in response to rate cuts. So if that was the first leg, if a 17% crash was the first leg after the first 2 rate cuts, okay, just know that, again, rate cuts simultaneous with crashes. So be prepared, guys. What are you going to do if this thing loses 50% of its value? What are you going to do if it's back down here again? Well, I know if it's back down here again, that's where you're going to buy, but you wait. Because if you look, you don't believe me, go look on Reddit. Go look at whatever, and just pick like the stock market channel. You could look at Wall Street Bets, but a lot of that's just memes and jokes. Most of those people don't even actually trade stocks. They just joke about stocks. But if you look at the stock market subreddits and all that kind of stuff, look at the comments. Look at the Boglehead stuff. This market can find a way to put all those people in pain, to punish them for taking for granted that a DCA or a just buy and hold and just buy every time I get a paycheck. It can punish that, right? Usually the market rewards that, but when there's a crash, it punishes those people. And how low can it go before enough of those people feel enough pain that they sell their position for a loss right at the very bottom? And you know why I know this? Because the market's really good at psychology. When I started out trying to be a trader and investor in 2020, that was the first time I risked real money. That same thing happened to me. I remember, and I can give a personal anecdote of exactly one thing that happened, and it was a beautiful learning experience for how the market tricks you. So what happened was, and obviously the prices were different back then because it's had stock splits, but I remember there was a huge where was it? Yes, it was this day right here for Tesla. I literally bought Tesla there, and then it crashed, and I sold somewhere like the next day, like here, for a loss. And then I remember I couldn't sleep one night, not because of this, but for some other reason. I was going to take some big test the next day, and I was sitting literally overnight. I couldn't sleep, and it was literally this day, and I was looking at the price pre-market, and before the stock split, it was at about $380 down here, and I was looking at it, and I was thinking to myself, if I bought it up here, and then I sold it for a loss, why wouldn't I buy it down here? But I was too uninformed, and I was too scared, and I didn't buy it. So I bought the top, and I didn't sell the bottom, but I bought the top, sold for a loss, and then I didn't buy the bottom. And I'm not special. That's how the average investor and trader will think off the bat when they start trading, right? They buy high and sell low. And then they're afraid to buy even lower than where they sold because it seems like they're like, oh, now it could crash. Well, mean reversion says otherwise, generally speaking. So if psychologically where I was at there was at a high in Tesla, and all these long-term investors, so to speak, they think they're long-term investors because that's what this month, they probably decided to become a long-term investor this month, right? Right at the wrong fucking timing, because the echo chambers and that kind of sentiment is just kind of like going through the air, if you know what I'm saying. So if all those people are at where I was when I bought Tesla there and then didn't buy it there, what do you think could happen? They're all in here, and they may be in from earlier too, but there's a lot, there's always new retail entering the market every day. All those people, think about it, they're becoming long-term investors here, but if it loses 50%, do you think they're going to stay long-term investors? If it's their first exposure to the market is that they lose 50% of their portfolio? No, they're not going to be informed enough to sit through the pain, and you know what they're going to do? They're going to sell for a loss right near the bottom or somewhere along the way, and they're not going to rebuy the bottom because they're going to think it is Armageddon and that the market will stay crashing forever. It's going to crash to zero. And then it'll recover and then punish them even more, right? That's just how it works. Okay, so anyway, this video's gone on a little bit, but sorry to take your time, but I hope this is insightful to you. And, not financial advice, but like just be prepared for the market to do that kind of thing that it always tends to do, which is that people, the general sentiment is to buy the wrong price and to sell the wrong price, right? And so if all these people are suddenly Bogleheads now, they're not going to be Bogleheads if it drops 50%. They're going to sell for a loss. But they think they have enough fortitude to become a Boglehead right now. So, but look, if those people do and they don't sell for a loss, eventually it'll recoup. But let me ask you this. Would you rather start investing in the market right as it's starting to crash, or would you rather start investing at the bottom of the crash? It's a mathematical fact that if you invest at the bottom of the crash, rather than the top of the crash, you will have greater returns in the long run, right? So generally speaking, there's no problem with investing every month. However, if you can see a crash coming and you're correct and you wait it out for a bit, yes, your returns will be significantly greater than they would have been otherwise. Probably by a factor of, well, it depends on how much leverage you're using. Without leverage, probably by a factor of 3 at least. With leverage, could be a factor of 10 or more, right? So anyway, take care, guys, and I'll see you next time. We'll see what evolves, but yeah, it looks like this is really, people are going to start feeling the pain. So it's going to be awesome to see the pain. All right, see you guys.